Hello, hello, and welcome everybody. We're going to get started here in a moment. Looks like we are live right now. And we got a few folks starting to trickle in. Welcome, welcome everybody. My name is Noah Davidson. For those of you who know me, I'm sure we've got some folks there that already know me, fans of tackle. Been around this for a while. I've been trading and investing for almost 20 years now, and I've taught thousands and thousands of people how to trade and invest. And we're going to talk about a pretty awesome concept tonight, but we're going to give it a couple seconds while we let folks trickle in. And I just want to take a minute to talk about our awesome disclaimer here. So let me bring this up here, and I'm going to share my screen. Bring this up, share my screen. I think I am anyway. Hold on. Get my little computer sound up, and boom. I'm going to play this little disclaimer, and then we're going to talk about it. All righty, now you got it. Little intro and disclaimer. And I want to talk about really what we're here to do tonight. We're going to talk about education. Not here to give you specific investment advice or to tell you what to buy or what to sell. We are here for educational purposes only. And just want to make sure that we talk about the value and the power of education. What we're going to talk about tonight, I think, is going to really interest you all. It's a really powerful concept. We're going to talk about legging into spreads, but really what we're going to be talking about is how to lower the cost of investing, how to reduce the amount of money it takes for you to invest. I am also joined here by the incomparable Emily Murray. How you doing?
I am wonderful. How are you, Noah?
I'm fantastic. So we were just before we started here, we were talking about your set to open up in your part of the woods, right? They're actually going to let you out of lockdown and
yeah, we're going to be sort of free-ish on Friday.
Free-ish, yeah, we were talking free-ish.
Yeah, free-ish.
What's the first thing you really want to do? I went out and got a haircut. It was pretty awesome.
I want to get my nails done and my toes done. I need a pedicure and manicure bad.
So do I, oddly enough. So do I. All right. Well, glad to have you here. Emily, you've been trading for how long now?
It's been 5 years, actually. Yeah. Time goes by fast.
Awesome. Now, tonight, what we're going to be talking about, I know it's a concept that you and I have talked about, and it's something that I even showed you how to do, if I recall, sitting in the back of a ballroom. We were talking shop and talking about how to go about that, reducing that cost of the trade.
Yeah,
legging into a
absolutely.
spread. Is this something you do in your own trading?
It is something I do in my own trading. It finally made sense to me where I could actually take it and apply it. It took me a while to get it, but yeah, I finally took it. And I was like, oh, this was easy. It wasn't as complicated as I made it turn out to be, but it was really simple.
Well, and it takes a while to get to simple. Once you get to where you really truly understand things, there's the learning process can be steep. And something that I'll always talk about is just the how important. Hey, there's some remnants from this morning's trading when we were talking about the lounge. Yeah. So one of just the learning curve for trading is really, really steep, in my opinion. It's one of those things where, we start out with zero information and we want to go to where we have, mastery. And I don't know that we ever really achieve mastery, and we can get really, really good, but trading is always hard. It's always challenging. If it was easy, everybody would be doing it, making millions of dollars. And it's not rocket science, and there's a lot of things we can do, but that learning curve really starts out pretty shallow, and then it just kind of ramps up as you start to learn. And pretty soon you get to where you're cooking with Crisco. And whether you're right here, if you find yourself right here where you're brand new to trading and you're just getting started and you get lost on a lot of things like terms and lingo, just understanding what the heck the person's talking about, that can be frustrating at times. We'll give that a little frustrating emoji. You can really express everything now with emojis, can't you? Right?
Absolutely.
Yeah. I don't know what I was talking about with emoji, but emoji cons, I don't know what you call them really. But once you start to really understand stuff, you start to learn, you start to feel a lot better about things, but you'll almost always run into difficulty where learning how to trade, like where you take a losing trade, for example, you get to where it's frustrating. That was not a very good frowny face. Let's try that one more time. We'll get there. It can be frustrating. if you are struggling with learning and struggling with learning how to do this more correctly, more intelligently, to control your capital, control your risk. So whether you're brand new to this or you're somewhere who's been at this for a long time, I know we've got a good group of people here already, and a lot of names I recognize. Hey, Addie, welcome. Dennis, Patricia, Barat, Jason, Thiago. I know a lot of your names.
Hey, look,
Donna.
Sylvia's
Hey,
here.
Emily, you're even here. Sylvia, how you doing there? Moose Lady. I still don't know who your real name is, Moose Lady, but I love your moniker. It's one of the best. Just out of curiosity, where are you chiming in from? Where are you tuning in from? I know we're all over. I'm in Utah. Emily's out in the DC area, right?
Yep, I am.
And we got Sylvia out in Seattle, I think, I would imagine. But Sandeep is here. Welcome. Karen Deep, welcome. So we're going to be diving in and talking about some pretty cool stuff tonight. And what we're talking about is not beginner level stuff. It is a little bit more intermediate level. But what I'm going to try to do is I'm going to try to help the beginners understand it to get a really good mastery of the concept. And then we'll go show you an example, which will show some of the devil's in the details. But I think it's going to be an interesting concept for you to learn. And what you are going to learn is really, really powerful. Here's what we're going to learn tonight. We're going to learn how to bring the cost. Well, let's try that one more time. The cost of investing and trading down, and we're going to work on building and increasing the return on investment. So if we can do this, if we can get your cost down on a trade and help you increase your ROI, understand that concept, will this be a successful meeting for us here tonight? If we can help you understand that concept, how to put less money in and potentially get a greater return back out. And I'm going to give it a second because I know that the YouTube's lagging a little bit. I'm trying to monitor the chat a little bit here. So just kind of get an idea of where everybody's coming from. If we can teach how to bring down the cost, get that ROI up. Okay. John says yes.
Sign me up.
All right. Okay. So we got, what was that? Like a 50-second lag, maybe not 50, more like 20 or 30, but it felt like an eternity. So, but glad. Okay. So that's what we're going to be doing. And we're going to be talking about how to bring the cost of the trading and investing down and increase the ROI. And ultimately, we're going to try to get to a point. Now, there's no such thing as risk-free trading. There's no such thing. But what I am going to show you is by the time we're done, you're going to actually see how to get into how to leg. That's a fancy word for starting out with one strategy and changing it, adding another strategy to it. How to leg into a risk-free spread. I've learned how to spell one of these days. S-P-R-E-A-D. Close enough. That looks.
You don't have to learn how to spell. I like the sound of it anyway.
Spread. Yeah, man. This is why I got terrible marks in handwriting. We're going to learn how to leg into a risk-free spread. Now, this trade does not start out risk-free. It doesn't. It starts out with risk. But we will show you an example, and I'll even show you some examples where I've managed to successfully do this. And we're going to see if we can get to where we have a trade where we have reduced or no risk. Now, the trade will start out with risk, but we're going to work on bringing that cost down. And I'm going to start out by doing helping us understand a concept that I think is really, really powerful. And this is something I learned from one of my great mentors, a gentleman named Andy. And it involves a little bit of math, not high level math, just a little bit of math. And if I can understand the math, then I'm sure you can understand the math. And our goal is going to go something like this. Okay. We're going to start out with, how many of you have heard this concept that rich people or smart people that know how to make money learn how to invest with no money? How many of you have heard that concept? Wonder how they do it. I'm sure you have, right? And when it comes to the financial markets, well, there's a lot of people who do that very, very successfully. They're usually the Wall Street broker types. They run things like hedge funds and mutual funds. For example, in a mutual fund, who puts the money into the mutual fund? Now, Emily, you can help me answer these questions because I know you know the answers. Who puts the money into the mutual fund?
Oh, we do.
People do, right? Okay. Who makes all of the investment fees?
They do.
They do. Okay. So if they make the money off of the fees and the person putting the money in takes the risk, do they have risk or do we have risk?
Well, they don't have any risk. It's our money that we're putting in.
Oh, because
that's
it's
at
other
risk.
people's money, right? Okay.
Yep.
So one way to get to where you can use other people's money is to, open up an investment firm and start a mutual fund and market that mutual fund and, show your Lipper averages and track record and try to get people to invest. And then you can make money off of the fees. Okay. But otherwise, if you and I want to get in and start trading and investing and speculating, and a lot of people out there are looking, they're very interested in speculating now. They know there's opportunity out there. But when you go and when people are brand new and they want to learn how to trade and make money, one of the first questions people almost always ask me, Emily, is when they find out what I do or I tell them what I do for a living, they always want a hot stock tip.
Right.
Almost invariably, that's like the first question. So is there anything I should buy? That's kind of what they go with, right? And when I'm always hesitant to give them any sort of information on that because I don't give investing advice. And the reason is because I don't know what their knowledge level is. I don't know what their experience level is, and I don't know what they're going to do. I could go out and say, go buy Microsoft. And I'm going to show you here what Microsoft would look like right now. And I'm just kind of picking Microsoft out of a hat because, who wouldn't want to own Microsoft, right? So let's do that real quick here. Let me get rid of the old disclaimer. And I'm going to bring up a virtual account inside of Thinkorswim. And we're using a virtual account, by the way, and you should use a virtual account too until your skill set and knowledge is up. We're going to talk about Domino's Pizza here in a little bit. But in the meantime, Microsoft, okay? So Microsoft, awesome stock, right? Everybody thinks it's a great company. I could probably say, just go buy Microsoft. That'd be a decent investment vehicle for you. Sure, there's risk involved, but what's the average person's knowledge and skill level going to allow them to do? If they're going to invest in Microsoft, they know fancy strategies to help them, reduce their costs and manage their risk, or are they just going to go out and buy the stock?
They're probably going to go out and just buy the stock.
They're just going out and buy the stock. So this stock happens to cost at the moment $179.75. Is it okay if we just call it 180 just to make the math easy?
We sure can.
Okay. All right. We're going to call it 180. So if you wanted to buy 100 shares.
You should say that like I can't remember his character from Austin Powers. $1 million.
$1 million. Yes, Dr. Evil. $1 million. How much money are we talking about? $180 a share times 100 shares. If you wanted to be able to buy 100 shares. Now you don't have to buy 100 shares. You can go out and buy one share. It would cost you $180.
Well, that's 18 grand in an IRA or a margin pay half.
So it would take you 18K to put that money in. And if the stock rose to 200, for example, that means you'd make $20, right? That'd be a $20 profit. And if you had 100 shares of that stock, what would your return be? So if you had 100 shares and it moved $1, you'd make $100. If you had 100 shares and it moved $20, you'd make how much?
200.
Not 200.
Oh, 2,000, sorry.
2,000. Yeah, I got you on the math. That'll happen to me every time too. So yeah, you'd make $2,000. Okay. That would be amazing. Now, what would your return on investment be if A, you bought it at 180 and B, it actually rose to 200? You'd get $2,000 return and you'd be putting 18K in.
Be about 11%.
So about 11% return, right? So let's just do the math real quick. We're going to go, let's try that one more time. So again, if you had a $2,000 ROI divided by the original price tag of $18,000, That's your 11 point. Emily, you were spot on. I hope you used your calculator, not your
I sure
brain
did. I
yours.
cheated.
Sure. All right, good. 11.111111%. Okay, perfect. All right. Now, one of the first lessons I learned from one of my great mentors is there's tricks that you can do to help you increase your ROI. And let me bring that back up. So if you start out with $0, that'd be awesome. But in this case, buying Microsoft will take lots of money. It would take 18K, which is what I'm going to refer to as a boatload. A boatload of cash. I don't know how much is in a boatload exactly, but 18K to a lot of people, that's a boatload. To other people, that's not a boatload, but I know I could go out and buy a decent used boat for 18K. Not going to get a fancy new one, mind you, but I could get a decent used boat for 18K. So in this case, you're putting in 18K and the ROI was 11% if you got the move to $200. Now, what if it dropped down to 160? You got a $20 drop instead of a $20 rise. You'd lose 11%, right? You'd lose $2,000. So that's something to consider. Now, one of the first things I learned is that if you can put less money in, we can put less money in. We'll call it less money in. We can potentially increase our ROIs. So one of the first things you can do to increase your rate of return, this also can increase your rate of risk, is to use what's called a margin account. Okay, if you use a margin account. Now, why would that be helpful for a trader? Why would that be helpful?
Less capital required.
Less capital required. And no, Dennis, I didn't find the boat yet. I have been looking. I've been searching the local ads, trying to find one. Haven't found the one I want yet. I'm waiting. I'm sure that we'll get a better price here in a couple of weeks. So they only have to put about 50% of the margin in. So you only need half the money. So if you only need half the money, because the broker lets you use half of their money, we don't need 18K, do we?
No, we don't.
How much do we need?
We need 9K.
9K. So that would bring it down to 9K. And if it rose to $20 a share up to what was it again? To $200. Mm-hmm. If it rose up to 200 and you got that $20 return, it's no longer 11% now. If you only put half the money in,
I know.
What just happened to the ROI?
It just doubled.
Okay. So the ROI, and I'm not that great at math, Emily, but I know that 2 times 11 is 22%. Okay. Well, that's awesome. That is fantastic. Now, the next thing that I learned that you can do to reduce the amount of money you put in is to get down to where you use options. OPTIONS, right? I should know how to spell options for sure. And options on average can bring the cost of that down to where you only need to put in about 5 to 10%, usually closer to 10%, but 10% of the capital required. So instead of putting 18K in or 9K in, you might only have to put in, say, $1,800. Mm-hmm. So $1,800, which means you're putting in about 10%. Now I'm just pulling that number out of a hat, just based off of years of experience. Let's go see if we're even in the ballpark.
How close we are. Yep.
If I wanted to go control Microsoft options until September, $180 strike price. The call option right now would cost $1,400. So I was a little high. Remember I said 5 to 10%. So this, you'd need to have about $1,400, $14.25 some odd cents per share ballpark. So that would bring the same trade down, the same risk profile down to where, okay, it wasn't 20. Sorry, it wasn't $1,800. It was more like $1,400. Okay. Now, if it rose to 20, you wouldn't make the full if it rose $20 up to 200, you wouldn't make all $2,000 in this case. You'd probably only make 15 to 1,800 or so. But if you only put 1,400 in, and let's say you got 1,400 out in ROI, and let's go see if that's even possible. Let's go see if I'm even in the ballpark. Okay, and I might be wrong, but if we're going to go use a risk graph here, if I were to buy that, so I'm going to go right click and I'll analyze a single option here. Oops, let's move that. Okay, we'll just call it $1,400 even. If the stock price rose out to 200, you only make $1,200, $1,300 that ballpark. I was just ballpark guessing, but we're in the ballpark. Okay,
we'll go with $1,250.
Yeah, but okay. So instead, it's not 1,400. I lied. The ROI would be about 1,200 max. In that ballpark. But what's your return on investment now? If you put 1,400 in and you managed to pull 1,200 out,
that's an 89% ROI.
It's enough. It's 80% ROI.
It's more than 22.
Right. Okay. Now, what we're going to be doing tonight is we're going to be learning how to put that kind of money in, a small amount of money in, but then we're going to work on how to get that money right back out so that you end up having $0 in the trade. Now, when we do this, it will cap our gain. We won't be able to make an unlimited amount of money. It will limit the amount we can make. But if we can get all of our money out and we have no money in the trade, but we still have open options contracts that can leave us with the potential to make some money, this creates a very interesting concept. Let's say that we could make $1,000. Okay, and I'm going to bring up the old calculator here. $1,000 profit. That caps our gains. The most you can make is $1,000.
Mm-hmm.
Okay, but you have $0 of your money left in the trade. So 1,000 divided by 0. Well, that's not a number. Okay, that's a problem. So let's get a better calculator. If I can get 1,000 divided by 0, see the difference between these calculators is that basic one only does algebra. This fancy one does calculus. And when you take any number and divide it by 0 with a calculus calculator, you get infinity. You get infinite ROI, which is a pretty powerful concept. And this is really what the power of education, I think, can do for you.
Yep. I like what Sylvia says in the chat. She says, I want that kind of problem all day.
It's a good problem to have. Now, Skyla showed up. You were late again yesterday for the halftime report, Skyla. Do you have a note from your teacher? Because, okay.
This is becoming a trend, Skyla. We're going to start. We have to
that's okay.
Detention is due.
I don't know what that was. Your microphone just freaked out on me, but I agree with you. It's good to have you here. Hey, if you show up late, that's fine by me. It tells me a lot that you showed up here at all. In fact, it tells me a lot that you're all here. The fact that you're here tells me something about you. Because what's the rest of the world doing right now? They probably just got off work. They're racing home, and they're probably just waiting to turn on whatever it is they're binge watching on Netflix. So you could be and there's nothing wrong with binge watching stuff on Netflix, but you got to work in some education for yourself, self-betterment all the time. So Tiger King is moderately. If you haven't watched it, Ozark's pretty good. It's intense. That's a fun one. Social distancing. Yeah, I can social distance more style if I have more money. So that's the concept. We're going to be looking for that infinite return, and we're going to try to get there by doing that. Now, the reason that this works is really it comes back down to that same concept of if we can learn how to put less money in. If we can learn how to put less money in. And if you understand the formula for ROI, it becomes a bit of a no-brainer. I'm going to go ahead and erase that there. And essentially, when it comes to calculating ROI, what we're taking, you're going to take the value final, that's value final, minus the value initial. So whatever money you put in initially, that's your investment. And whatever money you get out at the final, that's the profit. And to figure out what your profit is, it's the final value minus the initial value. So value final minus value initial. And then you need to divide that by value initial. So you divide it by the amount of money you put in, and that will equal the return. And you want to multiply that by 100 to turn it into percent. So that will equal your ROI. And it's pretty simple calculation. So value final minus value initial divided by your initial value. And when we get that value initial, you can do a couple things to try to increase your ROI. You can either try to get stocks that go bigger from when you buy them to where they end up, or you can reduce that value initial. If you can bring that cost down, and if we can get it down to zero or even close to that, we have much higher rates of return, infinite levels of return. So that's what we're going to do. And so what I've done, Emily, is I took literally 5 minutes before we started here tonight, and I went and looked at, let me bring that website back up. I went and looked at our recent stock report, and I looked at our options report, and I was just looking at some of the candidates on our watch lists. And what I saw was a couple of candidates that were interesting looking. So let me resume that so I can see the charts a little bit better. And I was looking at our little coronavirus watch list, and two stocks that popped up that I really liked were Domino's Pizza, DPZ, which is a $384 stock, but it's got this beautiful cup and handle breakout pattern.
It's so beautiful. That is a wonderful.
Isn't it beautiful? And the other one I thought that was pretty good looking was Netflix.
Mm-hmm.
So we're having Netflix and pizza tonight, guys. Netflix and pizza. And we might be able to show you the potential, the path to make enough money where you could have lifetime pizza. Well, maybe not lifetime, but you get a lot of pizza. There's going to be some calculated risks involved, but that's the idea. So I found these off of our coronavirus watch list, which, by the way, has been tearing it up. And we had a handful of other candidates. I'll show you a bearish one that I nailed this week doing this exact strategy. So we're going to start out with Domino's Pizza because I'm hungry. It's dinner time here, and I could go for some pizza. And I don't mind Domino's. It's decent pizza. I'm not going to lie. So, and they'll bring it right to my house. I don't even have to go out. So here we go. If we were to follow that same concept, how much money would it take to buy 100 shares of Domino's Pizza? It's costing $384. Call it 385.
85. So that would be 38,500.
38,500. You could buy a nicer boat for 38,500.
And a much bigger boat too.
A bigger boat, yeah, for sure. Faster, yeah, whole 9 yards. But it's pretty expensive to go out and buy the stock. Now, in theory, if you used an option or a margin account, you could go buy the stock and put in half the money. So then you'd only have to have what's that, 19K, 19,250 to okay. Well, these options right now, and I could go out to September. For this particular strategy, I'll probably only go to July. I'll go out 2 months, 65 days, and we can pick up an out of the money call option here. And I'll say we could go with either the 390 or the 400. Either one of these would work. Let's go with the 390. And you would have to put in about $2,480. Okay, let's just call it 2,500 to make the math easy. So $25, I'll say that's what we offer if we go buy that option. And I'm going to right click here and I'm going to analyze that trade. So now this is where this trade starts out with risk. And there are other ways to reduce the cost of the trade. If you come hang out with us over at Tackle Trading, we'll show you how to do debit spreads. And Gino could probably show you how to put a butterfly on this for $100, $50. But what we're going to show you tonight is how you could set up an order to buy the option. And if, this is the big challenge, if it moves up in the right direction, and we get the stock moving in the right direction, my goal would be by the time it gets to about 400, which is just about 1.5 days of average movement to get up to 400 with this cup and handle breakout. And these cup and handle patterns usually are pretty good for the breakout. Not always, but it's a pretty good looking breakout. And I feel quite a bit of confidence with a short-term speculation that this stock could break out and possibly pop up to 400. It's averaging about $10.80 a day. They're pricing in about $9.59. Call it $10. Let's just say it moves about $10 on an average day. And so if we could get a $10 pop from 385, excuse me, that would put you up to 395. And 1.5 days would easily get you up to 400. So this means your hope would be to end this trade and out of this trade by Friday, risk free. So we'll see if we can get this to work. Now, we'd have to put in $2,500 risk to buy this July $390 call. And for those of you who are new to options, I know a lot of you know options already, but for those of you who are new, what this does is this gives us the right to buy Domino's Pizza at $390 a share from now until the 17th of July, so 65 days. So we'd have the right for not $65, excuse me, but 65 days. Every time I draw a number, I just want to put a dollar sign next to it. 65 days. And it will cost us $25 per share. Every options contract, one contract is for 100 shares. So 100 times 25 equals $2,500. That's where I can put in a dollar sign. Okay. So $2,500 is your initial risk. I don't have to risk all $2,500. I can use a stop loss. We could keep our risk down to say, well, hey, if this trade goes the wrong way, let's say instead of breaking out, it instead breaks down and takes out the 9 or the 20 period moving average. I could probably keep the loss down to maybe $500-600. You could use a tighter stop loss if you wanted to, but it'd be somewhere in that ballpark. So here's what the plan is going to do, what we're going to try and do. Right now, we can buy this option for $2,500. Okay. $2,500. And I'm going to attempt to sell the $400 option. So we're going to buy this 390 call. We're going to split that spread and it's going to be $2,500. Okay. Then we're going to try and sell the 400. And right now, those are only going for $1,700 to $2,000. So $1,700 to $2,000. So what's half the distance there? Call it $1,750. So right now they're only going for $17.50 a piece. I'm going to attempt to sell those for $2,500, and that will only occur if the stock prices rise. So if the stock prices rise, the options premiums will go up, and I'm going to try to sell that 400 for what I paid for the 390. And again, in order for that to happen, the stock price actually has to break out and rise. And so the way I'm going to do that is I'm going to set up an order to do that in advance. And I'll go ahead and say, okay, I'll buy this and I'm going to change this. I'm going to change this to a first triggers OCO. So I'll do a first triggers OCO. And I'm going to right click on this. I'm going to create an opposite order. I'm going to create two opposite orders, one for a stop loss and one for the adjustment to try and sell the 400. So the first thing I'll do is I'll change the strike price. I'm going to leave the $2,500 price tag, but I'm going to change the strike price to 400. Now, everybody increase your focus. This stock price, in order to do that, would have to rise to 401. Is that within the target I thought thought it could get to?
Yes, it is.
Okay. And what this little calculator does is this estimates how much that $400 in order for it to go for $2,500, because right now it's going for 17 and change. And if I wanted to get $2,500 out of it, the stock price has to rise $15.84, a ballpark estimate, to about 401.34. Now, what that'll leave us with is we have the right to buy the stock at 390 and a promise to sell it at 400. So the most we'll be able to make is $10 times 100 shares. So the most we'll be able to make is $1,000. So in order to make this worthwhile, to even make it even palatable, I'm going to put a stop loss on this, and I'm going to dump it if it goes below $20. Okay. So I'm going to dump the call option if it goes below $20, which means the stock price would have to go down to 379. It would go down about $6. So if I bought it at 2,500 and sold it for 2,000, I would lose 500 bucks. So the risk is minus $500. So there's the risk part of it. But the reward part of it was how much? Do you guys remember?
1,000.
Okay. That equaled 1,000 bucks. Okay. Now I'm risking 500 bucks to make twice as much, but I'm going to try to get my risk off the table within 1 day, maybe two. It'll probably make 2 days. By Friday would be the goal. So this is called a bracket order. I set them up good till canceled. I'm going to go ahead and put in the offer to buy it at 25, put in an order to sell the $400 strike price, a different contract. So I will still own the 390 contract, but then I'll sell that 400. And if I can get 2,500 bucks out after I put 2,500 bucks in, how much risk do I have? Zero. I'll have $0 risk. Okay. So I'm going to go ahead and say, we'll hit confirm and send on that. I've got these set up good till canceled. Now, if this is, again, a little bit past where you're at right now on the learning curve, that's okay. This is the kind of thing we talk about at Tackle Trading all the time, whether we're talking about it in the lounge or we're talking about it in the coach's show. We go over these kinds of concepts. And this is one of my concepts. This is the kind of stuff you learn from me because this is one of my favorite things to do. And the idea is relatively simple. Okay. If I buy it and the stock price rises to my profit target, I will have my money out of the trade. If I buy it and it goes the wrong way, down instead of up, I could lose 500 bucks. Now let's make no mistake. I could lose 500 bucks, maybe even more, but I have to be 100% okay with that risk before I place that trade. Does that make sense? Like, you do not place this trade unless you're willing to lose 500 bucks. Now, you come hang out with us over at Tackle Trading. I can also show you how to keep the 500 bucks if it goes against you, how to manage the trade if it goes wrong instead of just a stop loss. I have another strategy that I can use to recoup the loss. But in this case, I like the chart. I like the setup, I like the odds. My big question is whether or not the market's going to participate tomorrow in bullishness. We saw a little selling pressure today. Certainly could see it continue to rise. But that cup and handle is pretty, and that's a very, very realistic profit target. Now I'm going to show you what this risk graph looks like. We already know what the risk graph looks like. This is the long call. The maximum risk is 2,500 bucks. We have a stop loss set somewhere around that 375 ballpark to keep the loss to about 500 bucks. So that's what that risk graph looks like. In order for this option to break even, the stock price would have to rise up to $415. So on the risk graph, where this blue line crosses that's basically the strike price plus the purchase price. So what's 390 plus $25? 415, right? 15. So that's where the break-even point is. By expiration, 65 days from now, it would have to be at or above 415 bucks for you to make a dime. Now, if it rose up to 400 in the next couple of days, you'd make 700 bucks or so. You'd be pretty happy if it popped up there in the next couple of days. What we're going to hope again that happens is it pops up, gets up to that $400 target. I'm going to right click and I'm going to analyze that trade. Oh, let me do this again. Right click, analyze that trade. And that's where the magic happens. If we buy the 390 for 2,500 bucks and I'm able to sell the $400 strike for the same amount of money in a couple of days, if the stock price rises, we'll get 2,500 bucks out. So we would have zero risk in the trade, the right to buy the stock at 390, a promise to sell it at 400, and that would cap our gain at 1,000 bucks. So we can't make any more than 1,000 bucks. That is the most we will make. But if that occurs, I want you to notice over here, the risk doesn't go below zero. I literally have no risk. I have $0 risk. So you can see that if you look at this little box over here on the left, the risk, zero. The reward, up to 1,000 bucks. You could make the maximum amount if it was above 400 by the 17th of July. If you stayed in there and it got past this little price action here where the blue line and the red line cross, that's called the theta switch point. That's at about 395 bucks. It becomes a cash flow trade, and you could end up having the options exercise where, hey, you take your right to buy it at 390. And then if it's out, say it's out at 410 or 420, then somebody will call you out and you'll end up selling it at 400. And so you'll make the 10 bucks between the two and times 100 shares.
I really love this strategy, Noah, because number one, like we just showed how, it takes away the risk, and then it frees up that capital, the $2,500 that you initially used to get into the first call option, to now go trade other things, because now this trade is essentially, there's no money in the trade.
Isn't that the beauty of it? So now I can recycle my capital.
I can recycle the capital.
Now, this trade certainly is not for everybody, because if you don't have the stomach for the $500 risk, you can still learn how to do the adjustment. You just don't do it on $400 stocks. You do it on $50 stocks or $30 stocks or $70 stocks, wherever you can stomach the distance to the stop loss. But just think about what we just did here. Now, this is an intermediate to advanced concept. And if you understood the concept, that tells me you can do it. It's just a matter of practice and application. But I picked Domino's Pizza because that chart pattern was so pretty, and I may or may not have been hungry. So, a little Domino's Pizza doesn't sound like a bad idea.
I think you're hungry.
I must be hungry. Okay. But you definitely need to learn more about this. Now, again, this is not for the beginner, and this is not the kind of thing you go out and start doing with live money, especially if you haven't put in the time and effort to learn it. But this is the kind of thing that we talk about over at Tackle Trading all the time. What we're going to do is we're going to spend another 15 minutes or so. We'll go through another example. You can also do this with put options, by the way, on the bears. And then again, the purpose of these Wednesday night webinars is to just talk shop a little bit, talk about the power of financial education, and to invite everybody over to Tackle Trading. Come hang out with us. Come join us. We're going to offer you a free trial membership, 15-day free trial to check out the same reports where we get those kind of candidates from, to help you get some of the training and education to help you learn this stuff. Thank you for posting that link in there. You need to be bullish on this for sure, Moose Lady. Moose Lady, you want to have a breakout pattern, like a directional. It could be a breakout or a pullback, but you want to have a +2 to +3 bullish bias. And when you look at a chart like Domino's Pizza and you see a cup and handle pattern on there, and again, for the newbies who aren't familiar with what a cup and handle is, that's where the price comes up, hits a resistance zone, drops a lot, comes back up to the same resistance zone, then just drops a little bit and comes back up to that same threshold, and it creates a little teacup, cup and handle. And those have a high probability of breaking out. Now, according to one of the great chart pattern gurus, a guy named John Murphy, he says that's got about a 70% probability of breaking out. Now, I don't know exactly how he came up with that 70% number, but I would say you've got a good, strong edge. Well, if it means if it can go up 70% of the time, well, that means that 30% of the time you're wrong and the stock could go the wrong way. You could end up taking the loss. And that's just kind of a hasty generalization on those numbers, not an exact, again, not an advertisement to buy or sell Domino's Pizza. I can place that trade with confidence because I know how to manage it if it goes wrong. I know, how to position size so that I can tolerate the risk tolerance. And you want to get to that point where you know what you're doing with confidence. So you want to come hang out and learn with us. And again, I know we got a lot of pro members here because I recognize so many of your names. So if you are a pro member, type in, hashtag Team Tackle or pro member in the chat and just give me a shout out. I always like to see, I don't know why, it just feeds my ego just a little bit. I'm not going to lie, but we really just want to help you do this. So let's take a look at, we can find another candidate that looks good. And maybe we find a lower price candidate. I don't know if somebody mentioned AMD. It's not quite there for the cup and handle, but it's not far off. It certainly can work. I need a better bullish pattern, perhaps, than AMD at the moment. What else might give us a good? I'm trying to think. Let me go back to my scouting report real quick and see if I have any hot candidates that the lower price. Hot to a little overheated. PayPal's, that's too expensive, but that's a pretty chart. Check out Regeneron. Ooh, pretty chart. Walmart, you could buy a Walmart off the bottom. Zoom, it's $167. ZTO's overbought. Unlock, Fleer, Citrix. They're not terrible. Let me look at the rest of these bull candidates here. That market sell-off took a little wind out of some of those sales today.
It sure did.
OKE, maybe. Work got a retest going on. It's only 30 bucks. Now I think I already have a trade on work, but we can make it work. Slack workspace. It is only $30 a share at the moment. And what we like about this pattern is it just broke out of one of those cups and handles and it's retesting the $30 zone. So we'd want to see some upward confirmation, but I think that this could pop up to 34, maybe 36 on the high end. So we'll do it one more time. So we'll go to work. We'll do the same thing about 65 days out. We'll go look at buying the $31 strike. It will cost you 370 bucks. One of the rules for this is you have to try to sell a strike that can actually achieve what you want. So I think I'll try and sell the 35 and see if we can get that we'll see if this works, but we'll go set it up this way. So we'll go create a duplicate order, $370 risk. I'm going to create an opposite order. First triggers OCO. I'm going to create 2 exit orders. One for my profit target to adjust the trade and the other one for a stop loss. So in this case, we were going to try to sell the $35 strike. So I just changed the strike price. I leave the price the same and I just changed the strike. That has to pop up $3.92. It would have to go to 34.56. Is that a reasonable target? Is 34.56 a reasonable target, or are we being is that too high?
I think it's reasonable.
You could go July for sure, John. You can go longer term with this, John. If I had my druthers, I'd go out and do 3 to 6 months on these, but I wanted to show you just quick hits. That's a reasonable number. You know what? I think I'm going to try to bring that down. I'm going to do the $34 strike instead. That only has to rise 291, 33.55. Is that a little bit more realistic target?
Sure
Okay.
is.
That's a much more realistic target. So we're going to buy the 31, try to sell the 34 for the same price that we bought the 31 for. In order for that to occur, the stock price has to go up, and then we'll use a stop loss. So that means the most we can make is there's $3 difference between those two. So the most you could make is 300 bucks. If you got into the adjustment, it would cap your gain at 300 bucks. Would you guys be comfortable risking, say, 100 bucks or 150 bucks to make 300 bucks? That's the big question.
Yeah.
You have to be okay with that risk. So for the stop loss, why don't we go set the stop loss down? We'll do a stop limit down at 270. So that would be $1 risk, or $100 risk. That means the stock would have to drop $1.96 below 28.74. That might be too tight. Oh, it's $1.96. That's more than 1 ATR. That's fine. That'll work. Does it get me below 29? It gets me below 29. So it'd have to take out this 9-period moving average and take out support in order to get me stopped out. So there'd be calculated risk involved. In this case, you'd be risking about $100. So you're buying it at 370. You have a stop loss to dump the option. If it goes below 270, you lose 100 bucks and the commission on top of that. And then if it pops up and is able to sell, it has to go up 292 to 33.56. It gets our money off the table. We put 370 in, we get 370 out. Of course, you can do more contracts if you want, but I'll set that up good till canceled. And I'm going to go ahead and hit confirm and send. And then I think I already happen to have a position on work. No, I don't actually, not in this portfolio. So there it is. There's our buy order, our profit target. It would have to rise for a couple of days to get there. And we have a stop loss order. And if it heads in the right direction, we will be able to sell the $34 strike, not the 35. And our goal is to get 370 out of it if it rises. So we have an initial risk of about $100 if the stop's effective. The most you could lose is $370 if you were dead wrong and you didn't manage it. But that would get you to where your max gain would be $300. So there will be a decent return on that. Hey, Frank, how you doing? That is exactly how it goes. So do you guys like that trade? Do you like how that works?
I absolutely love it because, first of all, when I first started trading, obviously we all go through this natural, level where you start learning about calls and puts, and then you start getting into the spreads and cash flowing and all that stuff. But I really, really loved buying calls and puts and speculating, right? And I learned about just buying the calls. And had I known about this, when I was getting started, it would have saved me a lot of blood pressure meds and
Oh yeah, for sure.
And headaches by making it by hedging it and making it a zero trade. So it's really cool to
well,
see
it is such a powerful feeling. So by the way, I got a text message this morning, Emily, from one of my students. Lovely lady named Eric. And I don't know if Eric is here tonight or not, but I woke up to a text message from Erica this morning that let me see if I can find it here. She had legged into not a straight up spread, but she had legged into a risk-free butterfly. Ooh. So the text I got this morning, and I'll just show you this. I don't know if you guys will be able to see that or not, if my camera's smart enough to zoom in on that. But she said, I'm just going to wait and see if that shows up. I have a risk-free spread. There you go. I have a risk-free spread on Hormel. She did it with a butterfly, with a little trick I showed her how to, yeah, you are hopefully here, because I don't know if she's here or not, but I was so proud of that moment because, I can stop sharing briefly. Let me just show it to you here. And I did not clear this with Erica. You guys might be able to see it now. She says she has a risk-free butterfly on Hormel. And then I had her send me the risk graph. And so this is not what we talked about tonight. This is one step more advanced, but she's got the risk-free butterfly on Hormel. And they was using the same basic concepts, but just one more advanced tweak on it. But getting into it's a really good feeling when you can get into a spread like that. So
it's a great feeling when you understand how to use it. Number one, because you're literally like your capital is now freed up to go do it on other trades. And then when it becomes, profitable, it's even more exciting because then you're like, yes, it's finally making sense. It's all coming together. Okay. So.
Well, I would be remiss if I didn't show the bear version of this.
Especially after the sell-off we've been having for the last couple of days.
We've been seeing a little selling, and I wanted to show you out here on the bear watch list. This is one of the watch lists for the scouting report that I put together this week. And one of our candidates that this is breakout Frank's candidate, breakdown Frank's candidate, Wells Fargo. Okay, so we put this list out on Saturday. There's Wells Fargo. There's the breakdown pattern we were looking for. And I did this exact same trade with put options on Wells Fargo, and it got filled today. So first thing I'm going to do is I'm going to show you the order history here. So I'm going to go show you the order history. We'll go back 5 days or so is all it would take. We'll go with Wells Fargo, WFC. There we go. So it bought on the 11th and sold on the 11th. So we bought two $25 puts for $2.22. This is showing the trade pass. So there it is. Bought two contracts, $25 puts, $2.22. And again, I did this in a virtual account, just to be clear. I can do this in a live account too. This was a great looking trade, and this is the kind of stuff I do. There's the sell order for $2.22 for the $25 strike, $22.50 strike, excuse me. So we bought the $25 put, sold the $22.50 put, got the same money out as we put in. And take a look at this risk graph on Wells Fargo. Okay. Bought the $25 put, sold the $22.50 put. It even got an extra penny out of it. Bought it for $2.22, sold it for $2.23. $0 risk in the trade, max gain $500. So the most it'll make is $500, and the stock price needs to keep dropping. Hang on, guys. This is an important call.
Oh, hi, Noah.
Hi, son. How are you? I'm in the middle of a class, Jonah. Can I talk to you in a minute?
Oh, no.
That's my 3-year-old son. He's just calling me. That's why it's an important call. I will call you back in 5 minutes when I'm done, okay?
Okay, Daddy.
Okay, I love you. Bye-bye.
Love you, Daddy.
All right, he likes to FaceTime me. Okay.
He said, no. Talk
No,
to me
no,
now.
no. Talk to me now. Okay. So that's the idea. There's the purchase, there's the cap gain. And again, they did it on the 11th. So it caught it really on that first day down. And now it's continuing to drop. This trade has no risk. And I'm just rooting for Wells Fargo stock to stay down. It just has to stay down. This trade only has till July 17th. And again, at the moment, it's up $283, but it has $0 risk and could make up to 500. Now, come hang out with me in the Traders Lounge, and we'll show you how you can squeeze a couple extra bucks out of that same trade without putting any new money in. And that'll be when we get a buy signal on that. Because I don't think Wells Fargo is going out of business. I think the stock price is going to get beat down for a short while. Then it'll find support and run back up. Yep, I did set a stop loss. And so you'll actually see it when I was looking at that, the orders, the stop loss got canceled. So I had a stop loss at $1.20. So I had $100 risk. So I took $100 risk, and now it's a risk-free trade that can make up to $500. I'm not doing the lounge tomorrow. I'm actually taking off out of town. I'm driving to Denver with my wife and boy tomorrow. So I will be there next week, but we'll have plenty of time to talk about that adjustment in the lounge next week. Did you guys have fun tonight? Did you learn something of value? I know I have a lot of fun talking about this stuff, and hopefully we kept it simple enough for the newbies to understand and to at least conceptually understand it. And if you got lost along the way, that's okay. I don't think anybody learns this the first time. When I showed this to you the first time, it probably melted your brain, right, Emily?
Sleepless nights. In fact, Sylvia said that she finally got it at 4 a.m. in the morning, and I think it took me like another month after she got it. But it eventually does start to click. And for anybody that's brand new, this stuff obviously does take practice. So that's why we use, paper trading and virtual accounts to practice these trades. So don't go do anything in a live account. But the more you practice, the more you stay engaged, the more you come in here and ask questions, eventually they will start to click. But be patient with yourself, but definitely come in here and learn, and you'll really get a lot out of this.
Absolutely, you will. So now what I'd like to do is just make sure everybody gets the link, especially for those of us who are just joining us or watching this on the replay. Come hang out with us over at Tackle Trading. You can get yourself started. We have, by the way, we have courses. You have Options 101, where you can learn all the options basics. You got Technical Analysis 101, where you can learn technical analysis basics. You got a 7-step guide to trading and investing that's very, very helpful, that we'll give to you just for signing up. And you can take all these 101 courses for free. They're included with the subscription. And I'm going to take you over here to our store. And I'll just click on the link. No, I can just get there to the homepage. Let me just come down here to do it on the homepage. Just scroll down to the bottom of the homepage and go to tackletrading.com. Scroll down to the bottom of the homepage and say, yes, I want to take control. And that'll open up your 15-day free trial right there. And you already put that link in the chat for me, right, Emily? Perfect.
I sure did.
So we have that link in the chat. Come check it out. 15-day free trial. When you sign up, you'll get one-on-one introductory session with Frank, who's here tonight. Say hello, Frank. And Frank will walk you through and show you how to really maximize your experience with tackle trading. And again, I know a lot of you guys have been members with us for years and years and years, and our subscription rates just growing and growing and growing. And our community is I think it's just awesome, the best community out there. And so if you enjoyed tonight, make sure you click like, subscribe, the bell, the whole 9 yards. If you learned something valuable, well, we'd love to carry on this conversation and teach you more, and help you guys get signed up for a 15-day free trial. And then after that, if you like it and you stick with it, $97 a month to be a part of the best trading community. Hype. This is not get rich quick. This is real stuff. This is very, very frank. A lot of these trades cost money. They end up losing. It's the reality of trading. But when you can get to one of those risk-free trades, it's a great feeling. So enjoyed myself tonight, and just to want to respect your time and keep this to an hour. So we're going to go ahead and call it. But go ahead and click on the link, take advantage of the 15-day trial. That's a standing offer. By the way, that link's also in the YouTube description below the video. You can just click on the link there.
Yep. Thanks guys
guys.
for being here, and all the pro members. We have our cash flow condos at 8:30 tonight. So go get some dinner and get ready for the second class. We're not done yet.
All right. Great night, guys. We'll see you. Thanks, everybody.